everyone. Thanks so much for joining us at the Buzzworthy Women Podcast. Today, I am super excited to introduce you to my guest, Danielle Hendon. Danielle is the owner of Four Corners CFO, where she guides business owners to recognize their true value, increase their profits, and understand their finances and how they work in their business. Danielle, welcome on the show.
Thank you so much for having me, Tori. I am super excited for this conversation.
I love when we have kind of our green room conversation and then we hit record. It's like we've already been friends for, years, and now we just get to continue this conversation.
It's amazing. And we were talking about like all the connections that we have in this small business community. I love it.
I love it. Well, so tell us a little bit about Four Corners CFO and how that got started for you.
Yeah, so I am a CPA. I went to school, got my master's in accounting, got my license as a CPA, and went into public accounting. I loved what I did. I went the audit track. I got to know a lot of really cool people, do a lot of really cool things. But then I started a family and I realized that 80-hour work weeks and a newborn don't really mesh very well. So I left public accounting, and being in the Houston area, my experience was predominantly with oil and gas. So I landed in an oil and gas company here in Houston. And again, loved who I worked with, loved what I got to do. But they went through bankruptcy when the oil prices tanked, and they came out the other side owned by the bankers who started slicing and dicing and selling everything off. And
Wow.
then the pandemic hit. So it became very obvious that the doors were going to close at that point. And I will be honest and say that the pandemic was a bit of a double-edged sword for me. It was
Mm.
an opportunity for what I will admit was a workaholic mom, because when you love what you do a lot of it, to get a different taste of parenting and a different perspective. I
Mm.
was help them finish homework mom and get to know the teachers and the coaches and the friends, and I didn't want to give that up. So I took a leap of faith and I started Four Corners CFO to bring those big business concepts to small business owners. I never thought I would say I'm grateful to have walked a business through bankruptcy, but having been on that side of it and being the one that controller calls and says, "Hey, we've got two people left. How do you want me to do this now?"
Oh my
really
gosh.
gave me a different perspective of how to downsize those processes and make
Yeah.
sure that they could fit a smaller business, which is exactly what we do now. We take those big business concepts and we bring them to small business owners in a way that makes sense to them and that
Mhm.
they can understand and use. I love that in corporate, and I'm sure a lot of your listeners might feel the same way. When you're in corporate, you are always working to increase share price or shareholder value, however they want to say it. But when
Yeah.
you're in small business and you're serving other small businesses, you're
Mm.
increasing someone's livelihood and you're increasing their legacy and you're having an impact on that community.
That is so true. I love that, just that last piece that you said about it's not really just providing a service or, working with another business to be profitable for yourself. You're helping them grow their legacy, their life, their business, their livelihood, all of those things. And it just puts so much importance on what you do and doing it well and doing it for the right reasons. So I love that you just said that.
I was just telling my team in our team call this week that I would love to know what they're passionate about, because I feel like I
Mm.
go find clients that do things I'm passionate about that really feel
Yeah.
good to me, because then I feel good because now they're doing good and helping other people
Yeah.
in the world. And it's this ripple effect and it's amazing.
Mm. Yeah, that's awesome. So I want to touch on the big business CFO concept and bringing that into the small business, because I think a lot of people listening can relate to coming from corporate to starting their own business, or partnering with someone and growing a business, where they come from having a CFO or they have a financial person in the corporate space who takes care of all of that for them, right? They don't have to worry about it. And then when they're the captain of the ship and the owner of the company, everything falls on their plate. And they're like, wait a second, I don't know exactly what to do with the finances. Like, I think I know, but am I doing the right things? So talk about how you take that big CFO and help them bring it into their business realm.
So I work with all of my clients, regardless of size, through the same 6-part framework because it's what works. It's what I know works, whether we do it in a group membership format or one-on-one, or we're doing it for you and helping you through that process so you don't have to worry about it and acting as that CFO that you would have in corporate. And that process starts with, so I'm going to walk you through it's a 6-part framework. The process starts with the balance sheet, which is probably
Mm.
one of the least looked at financial statements in the small business world. Everybody knows their revenue numbers. A lot of people hopefully know their profit numbers, but very few people look at the balance sheet. They just look at the bank account. So
Yeah.
we start there and we make sure that the balance sheet is, first of all, reconciled. I love my bookkeepers, but not all bookkeepers are created equal. And we want to make sure that the balance sheet is reconciled. They're looking at all of the accounts, everything makes sense, and we can understand the story that those numbers are telling about your
Mm.
business, because your balance sheet tells us what your business is worth. It tells us what you
Interesting.
own and what you owe and how your business has performed over time. So we start there and we get a really good understanding of how the balance sheet is set up. It's that foundational piece. If your balance sheet doesn't reconcile, we can't necessarily trust that your P&L's got everything on it. So that's why
Mm.
it's important to start there.
Do
And
you
then
think,
we go, sorry.
sorry, I was just going to say, do you think more people are familiar with the profit and loss than the balance sheet?
Oh, definitely.
Yeah. Okay.
I think a lot
Okay.
of a lot of people know what comes in the business from a sales perspective, and they know
Yeah.
what goes in the bank account from a cash perspective. But a lot of people lose sight of the fixed assets or the debt
Mm.
payments or the other things that sit on your balance sheet. For example, if you've been in business for a few years, at the end of the year, your net income from your P&L rolls over to your balance sheet as equity. It's retained earnings. It's equity in your business, and you want equity. You want that value. So a
Right.
lot of that, I think, gets overlooked by a lot of business owners.
Mm. Interesting. Okay, continue on.
So after we look at the balance sheet, part 2 is all about your revenue. And it's getting an understanding of how money comes into the business. What are your different revenue streams? What are the services? What are the products? Grouping them in a way that makes sense to you to see.
Mm.
I couldn't tell you how many businesses start with us and everything's in one line. It's one sales line and it has everything under the sun. And when you do that, you don't get to see what's performing well. So breaking that out, working with the bookkeepers to break up revenue, but also understanding what is your cost of goods sold? What goes
Mm.
into creating that revenue, especially with service providers. People do not value their time or the
Mm.
time of their people, and you'll see that sitting in their expenses, but it won't sit in their cost of goods sold. So they think they've
Interesting.
got this amazing profit margin, but they're not
Yeah.
accounting for what actually went into generating that revenue. So
Yeah.
walking everyone through kind of how many hours does it take to do this? What is your expectation? What are your people doing? And
Mm.
along the way, we also start setting a couple of KPIs. So I'll give you an example of an attorney that I worked with, and they do a lot of flat fee pricing, which is great. But if you're flat fee pricing and you don't know how many hours your people are spending,
Mm.
you don't actually know if you're profitable. So coming
Yeah.
up with some of those expectations of how long it should take, so then we can measure it against how long it's actually taking from a key performance indicator or KPI perspective.
Mm. Love that.
I will also say your revenue is where in every business, there's 3 profit levers you can pull to increase profit. Revenue holds 2 of them. It's going to be
Mm.
raising your rates. As women in business, we tend to not value ourselves nearly as much as we should. So raising your rates will instantly increase your profits. And
Mhm.
then knowing what your most profitable product or service is and go sell the heck out of that. So
Yeah.
if you know your profit margins and you know it by product or service, then you know where to focus your marketing efforts.
Mm.
So that's our focus in revenue. And once we're good with revenue, we move into the expenses. So everything else on that P&L underneath your revenue section is an expense in your business. And we group those expenses into one of 3 categories. You're going to have what I like to call your required expenses,
Mm.
everything that you need to run the business. I don't know a business that can run without cell phone and internet today. So those are
Yeah.
required to be in business.
Yeah.
Then you have what I like to call the personal perks, the things your tax CPA or EA told you to run through the business, but they don't necessarily add value to the business. They add value to the business owner. One of my favorite examples here, and because we were talking about our kids earlier, is putting your kids on payroll. A lot of tax people will recommend putting the kids on payroll. Phenomenal for your tax strategy. Not so
Wow.
beneficial to the business.
Beneficial for the kids. I'm sure they love that.
Yes. So then everything else in that expense section, if it's not required and it's not a personal perk, is going to be an investment in your business. And we want to take the time to understand what all of those are and make sure that they are either giving you time, money, or both back in the business. And if they're not, then the next question is it marketing? Because we all know marketing takes time, and we want to talk through what that looks like. What is the deadline to then measure the marketing efforts? But if it's not marketing and it's not giving you back time or money, then it's not a good investment in your business. And we want to think about why you have that and if we can get rid of it.
Yeah.
I will also say one of my favorite things to do in this section is go back to those required costs and ask ourselves if there's another way to accomplish that. A lot of times we think it's required, I just got to do it, there's no getting around it. And we don't necessarily get out of the box and think, could I do this for cheaper? Is there another thing that could do this without spending so much money? And trying to be as efficient as we can in those efforts.
Love that. Oh my gosh. I've got like so many questions, but you're on a roll, so I'm going to let you go.
I'm throwing a lot at you. It gets easier from here. Well, it gets more fun for me from here. Once we understand the revenue and the expense, we're always going to look at the balance sheet before we jump into anything because it is the foundation. It tells us we're done and we're ready to look. But then we build out a budget and we go line by line through the P&L and month by month out for the rest of the year. And we take the information we've learned in the revenue and the information we've learned in the expenses to map out kind of those frequencies and trends and where we want the money to go. And that gives us the picture of where we're going to be at the end of the year. And we get to have the conversation of, is this where we want to be? If it's not, what do we need to tweak? What do we need to adjust? How do we get where we want to go? And then once we have that budget, you also have to layer in kind of those one-offs. What conferences are you planning this year? What travel might be coming up? Are we going to need a new hire in order to cover things? And make sure we map those into the budget as well. And then the fifth part, or the fifth month with clients, is all about budget to actuals. And this is honestly my absolute favorite thing to do. It's my favorite part of the process. We do it every single month with our ongoing clients, and it is all about understanding the numbers. It is not about hitting your budget. And I'm going to say that again. You should not be hitting your budget, because I think in 3 years of doing this, I've had one client hit their budget once, which is great. It means we've got really good modeling. But it also means they've got some really good consistency, which is not very common in business, especially right now. We've all been through the pandemic, and now we're talking about recessions. And I mean, what else is the world going to throw at us?
Yeah.
So you want to know when your budget and your actuals don't line up, why? Why is this expense coming in higher? Why is revenue coming in high? If revenue came in higher, I want to know what we did and how to do it again. What worked really well? And sometimes expenses coming in over budget isn't a bad thing. If you use contractors in your business and your expense for contractors came in over budget, I'm going to bet your revenue also came in over budget. And that's a really great thing. We just want to adjust how we're looking at it going forward. So when you look at budget to actuals, the key here is to ask, do we need to make an adjustment in the budget, or do we need to make an adjustment in the business so we can still meet our goals?
Interesting.
Once we're good with budget to actuals, the very final step, even though it's a lot of businesses come to me and this is the first step they want, it's cash flow. It's how do we make sure the bank account has the money in it that we need to continue going?
Yeah.
Cash is king. A budget's not going to make or break your business, but your bank account will. So we want to look at cash flow in a way that makes sense to business owners. I will be the first to say a lot of accountants don't like cash flow statements, and I don't know a single business owner that can understand cash flow statements in accounting terminology. So we don't use cash flow statements. We do a cash flow forecast, and it's going to look really similar to your budget. It's going to rely on your budget, which is why it's the last thing that we do. You're going to take the budget and the expectations going forward and layer in the timing components. The easiest example for this is going to be your credit card. Most business owners, myself included, put all the expenses we can on the credit card, get every point you can while you're doing it. Hopefully, you're paying that credit card off every month. And if you are, that means last month's expenses are this month's cash flow. So the
Mm,
timing of when things hit your bank account will be different in your cash flow than it is in your budget. There are
interesting.
also 3 things that your budget won't show you because it's not on your P&L, but it will hit your bank account and we need to account for it. The first one's going to be debt. If you're
Mm,
not paying the credit card off in full, any of that debt is going to need to be in your cash flow in whatever extra payments you're making. If you have a line of credit, if you have an idle loan, those things
mm,
are going to hit your bank account, but they're not going to hit your budget.
yeah.
The other piece that will show up in your bank account and in your cash flow forecast is going to be any savings for taxes, for emergency funds. Our goal is for everyone to be profitable. And if you're profitable, we're going to be paying some taxes. And we do not want that to be a surprise at the end
Yeah.
of the year. So making sure we set that aside. And last but not least, because we want you to be profitable, we want to be taking profit distributions. And I know
Mm,
different people may see this in different terms. They might call it owner's draws, owner distributions. I like the term profit distributions because I want it to be coming from profit. So when we
yeah.
take those profit distributions, we want to make sure we're balancing salary and profit distributions for good tax strategies, and that's also accounted for in our cash flow forecast. And then from there, we go with the flow. We go month to
Yeah.
month and figure out what's going on in the business every month that changes the way that our
Mm.
budget needs to go.
Now, okay, I have so many questions. I don't even know if I can if I can filter all of the thoughts going through my head. But so first thing, do you think that a business has to be at a certain gross revenue before they have a financial advisor or, a company like yours to help them with this structure and foundation?
I think if you can find a company like mine that has a lower end tier that is allowing a group membership or a
Mm,
course that can give you this same information, every business needs a budget. There is no
right.
threshold to wait to have one. It's what gives you control. I know I personally feel like I'm flying by the seat of my pants sometimes, and that budget is what tells me where we're going and if we're
Yeah.
getting there.
Yeah, absolutely. Okay, so the next thought. So you talked about structuring your offers to make sure that you're profitable and you're accounting for contract work and all of those things. Is there like a magic? Is there like a formula or like, when you set your prices, you have to have a percentage that goes to this, a percentage that goes to that, or how do you structure that, or how do you help the client structure that so that they know that they're profitable and they're charging enough for what they're giving their clients?
So the traditional accounting answer is it depends, but I will say I am a huge Mike McAllowitz fan. I love
Love
Profit
it.
First. I love the way that he benchmarks, and I refer to similar procedures in our practice. So the rule of thumb really when you're looking at a service-based business is you want to be at about 50% profit margin. If you're not, you're
Mm,
going to have a really hard time covering all those expenses that come out at the bottom. So
yeah.
50% is kind of my rule of thumb. I know attorneys, we tend to go a little bit lower than that because professional services have so much wiggle room in that rate
Mm,
that we want
yeah.
to make sure we're doing everything we can. But I would say 50% rule of thumb. If you want a little more detailed and getting into kind of the operating expense and the owner's comp, highly recommend looking at Profit First. He's got so many free materials out there that can help.
Yeah, I myself am a Mike McAllowitz fan and have read Profit First. And so I was just looking at some new offers and new services, and I was doing exactly that. Like, okay, what is this operating expense percentage, and then the profit margin, and then the owner or owner expense and that sort of thing. And so I was looking through, and I'm like, gosh, I don't think I'm charging enough for this. And so it's like really how you have to structure it. And I think as a business owner, it's so important to go through that practice because you'll think like, oh, I should charge X dollar amount for this service. But when you really pull back, all the numbers and the expenses and the contract work and this and that, like that money quickly goes down, the profit goes down very quickly until you get to a certain number and you're like, okay, that's the right number.
Especially for the solopreneurs or the people that
Mm,
are the primary doer in their business, I
yeah.
have found almost everyone forgets to value themselves. And then
Yeah.
you end up with no profit and no payroll, and that's a problem.
No profit, no payroll. Ah!
And then you just burn out.
Yeah. So true. It is so true. And I think a lot of entrepreneurs and startup businesses, I think that's part of it, right? That's why they burn out or they shut their business down, is because they haven't looked at the financial foundation of their business. Like we come into the business as technicians or creatives, or we have whatever skill set we bring to the business. And a lot of times the skill set's not necessarily finances or operating your business and business, management sort of thing. And so I think the sooner you get, a company like yours or a support person in this financial role, the more likely you are to be successful. Because, like you said, like the balance sheet, like who thinks about that? Like when you first start, you know about the profit and loss. Like, okay, I've got to look at my profit and loss, but you don't think about like reconciling and all of these other things. And like you just said, like this framework is amazing because it's basically walking you through each piece that you need to set you up for success moving forward, so that you know what's coming. It's not a surprise.
Absolutely. And I would say, especially as women in business, we tend to
Mm,
carry a lot of like introspective thinking of,
yeah.
I should know this, I need to know this, and then the shame and the guilt and the mess keep us from asking for help. And
Mm,
I will say, from a financial perspective, any really good accountant or finance person, the messier it is, the bigger the problem, the more fun it is to clean up, and the more rewarding it is when we get there.
I bet. I bet. So I want to wrap this up and ask you kind of a final question to guide our listeners on what's the next step, or what's one thing they can do today or this month before we hit the new year, um, to set themselves up for success.
Ooh, to boil it down to just one. So I'm all about how to take action in your business. And everybody right now is looking towards the end of the year. What does next year hold? I know I said balance sheet's important, but it can be a little cumbersome and I don't want you to put your head in the sand. Go look at what you know. Look at the
Mm,
P&L and ask yourself if you're happy with where things are.
mm,
Run that benchmark, and you can go look it up on Profitverse. It's really readily available. Look at your P&L and compare to where your money's going. Is that where traditionally a business of your size should be putting the money? And if it's not, ask for help. Go
mm.
ask someone for help. It is out there in a variety of ways that you can get for free, for low cost, or for high ticket prices.
Awesome. I think that's actionable and advice that people need to hear and something that they can do today. So thank you for sharing that, and thank you for sharing your framework. I think that alone is just golden. I think people should, if they need to hit pause, go back and listen. Right, like you have to hear that framework, or reach out to you and your company and go through that with you, because I think that's something that's going to be a game changer for a lot of businesses to set themselves up for success. So thank you, Danielle, for being a guest and for sharing your expertise and your knowledge. And how can people get in touch with you to learn more?
So the easiest way to get in touch with me is by my website, and we will have a landing page just for you guys. So it'll be for the number 4 cornerscfo.com/buzzworthy women.